Good afternoon and welcome to Dennis Lee's Forex videos. In today's topic, I will be discussing Martingale EA Strategy. First, I would like to give an update on the trades that were opened by the Dynamic Breakout Strategy 2 EA. 3 of the 4 trades have closed at a profit. The Aussie USD closed at a gain of 286 pips. The Euro USD closed at the gain of 348 pips, and the USD Swiss closed at a gain of 255 pips. The Sterling USD trade is still open with an unrealized profit. The total realized profit is 890 pips, which is a good start for the EA. I have been busy the last few weeks creating a new EA, which is a combination of all my work over the last 9 months, and it is based on my own manual swing trading. It utilizes 2 of my own indicators as well as an open source neural net platform. This new EA has a recovery feature that is similar to a martingale, which brings us to today's topic. I will be discussing martingale and anti-martingale and the disadvantages and advantages of martingale. And we will be looking at several commercial and free EAs, as well as a case study of a Martingale EA strategy.
So, as an introduction, what is martingale and anti-martingale? Original martingale, which was popularized in the 18th century, was a type of betting style that was based on the premise of doubling down. In Forex, this means that after a trade enters a drawdown or an unrealized loss, you would open another trade with the same lot or bigger lot at a cheaper price. So, for example, the lots traded that may be the same or not. It can be 0.1, 0.1, 0.2, 0.4 lots, etc. What is an anti-martingale? On the flip side, an anti-martingale strategy increases the lots after wins while reducing them after a loss. In Forex, this means that after a trade enters an unrealized profit, you would open another trade with the same lot or a bigger lot at a more expensive price. Anti-martingale works best in a trending market, while martingale works best in a ranging or counter-trending market. The advantages of a martingale is, first, it works on the premise of a mean reversion. That is, prices will revert back to the long-term average. For example, one strategy would be to use the standard deviation as a limit to the trading range. Hence, when prices reach 2 times standard deviation above or below the average price, we would then open a sell or a buy trade respectively. Second, the cost basis of each lot is reduced for every trade placed because of averaging down. For example, if we bought the first lot at 120, then followed by the second lot at $1.10, the average cost or the cost basis of each lot is reduced to 1.15. Third, as the bigger lots are placed at a cheaper price, when the market turns in your favor, the profit from this trade will cover all of the previous losses from the smaller trades. What are the disadvantages of martingale? An analogy from the equity market is the concept of averaging down when buying a stock. However, it goes against the grain of do not catch a falling knife, which means that you should not try to catch the bottom of a falling market. For an anti-martingale, the analogy would be averaging up instead of averaging down. Secondly, financially, you do need to have deep pockets as the risk of drawdown and margin call is very high if the market does not recover or pull back. An analogy is a gambler who has lost his initial capital and tries to win back his money by betting larger. Psychologically, you are throwing good money after bet rather than accepting that your first trade was a loss-making decision. This is because most martingale strategies do not have stop losses, hence the risk of blowing up your account is high. In one case, I had watched one real account which started with $10,000 in June 2011 and had an amazing run until August 2011. In just 3 months, the account balance was up to $35,200. However, in October 2011, the account hit a margin call and the balance was reduced to just $650. The account used a martingale strategy called the Genial EA.
So what are the available Martingale EAs, both free and commercial, that are out there? I have listed here some free EAs as well as commercial EAs. For the free EAs, which can be downloaded from the MQL4 website, we have BR Setka 2, Mandarin Martingale, and Multi-Level Strength. And for commercial EAs, we have Grid Me Up FX, Forex Flow, Tom's EA, which is quite expensive, and Forex Envy, which is the most popular. And we also have EAs that have a recovery mode, and basically the recovery mode acts as a martingale, such that if the EA goes into a drawdown, the recovery mode will then increase the lot size to recover the initial trade. So there are robots that are not martingale in particular, but they have a recovery option, which has a similar characteristic to a martingale. So what are the comments made by traders? We have positive comments for those traders that use Martingale EAs. You can read it on this slide, as well as negative remarks by traders regarding Martingale EAs. So you can see the comments are at both ends of the extremes. We will now have a look at a demo of a Martingale EA. This is a semi-automatic Martingale EA which I developed, and it's semi-automatic because it does not open the first trade. It relies on the user to manually open the first trade. However, it manages the open trade and closes it automatically. So let's take a look at the settings for this EA. The first setting, base lot, is the lot size of the first trade, which is 0.01. The second setting, basket level, determines the maximum number of trades that the EA can open. In this case, it is 12. Okay, mode can be either 0, 1, or 2. Mode 0 means that the lots are fixed in size and do not increase. Mode 1 is where the lots increases exponentially. And mode 2 is where the lots increase based on the Fibonacci sequence. The next setting, short cycle, determines the grid size or the number of pips between each trade. In this case, it is 10 pips. So every trade will be exactly 10 pips apart. Okay, the next basket 1 expected orders shows the lot size for each trade expected. For level 1, we have lot size of 0.01. For the next level 2, we have the lot size 0.01. For level 3, we have 0.02, all the way to level 12, where the lot size is 1.44. So as you can imagine, the margin requirement increases exponentially. As this is a demo account, I will manually create a pending sell order to show how the EA manages an open trade. So I'll create a trending line and I will name it line X2, and the value is the open price that we want. So we will now wait for the price to fall below line X2 to open the pending order. So the pending order has been opened. As you can see at the bottom terminal window, a sell trade with the lot size of 0.01 has been opened at the price of 1.25046. Let's take a look at the info from the EA. We can see that basket 2 expected orders, the first level has been filled, so it doesn't appear anymore. The second level, the lot size expected is 0.01 and the price expected is 1.25146, which is exactly 10 pips away from our initial trade. For level 3, we have lot size of 0.02 and the expected price is 1.25246, which is also 10 pips from the second level, and so on. And the EA will automatically close all trades for a basket when the overall P&L is in a profit, which means that some of the earlier trades will result in negative pips, but the overall profit will be positive. So this is the end of our demo, and I hope you enjoy the demonstration. If you have any feedback or questions regarding this video, you can either email me or write a comment on my YouTube channel. So thank you for watching this video.